Hello, everyone. How we doing tonight? And Stan, I agree with you, man. These songs at the beginnings, they get me in the right mood. They're hitting at home. Just quick sound check. Make sure everybody can see my screen as well. All right, you guys can hear me? Can you guys see my screen? Awesome, awesome. All right, well, we'll get straight into it today. Our first high probability trading day of the week, and it was quite not as interesting as yesterday, right? There will be no PA review on the PA from Tuesday because it was a day after a bank holiday. We understand that price needs to catch up, and as we can see, price did indeed catch up. Sorry about that. Now, our objective after a large range day should always be the same. First, lower your objectives, right? The range from yesterday was super aggressive. We don't usually see this type of down move very aggressively and then a continuation, right? As we've seen, right? Just at the start of August, we saw three huge down days, very volatile, and then aggressive moves to the upside. But what do you see? Well, any very large day, the next day has usually a very smaller range, usually less than half, right? Same thing here. Maybe if I just remove this, same thing here. Next day, very small range. Large range, very small range. So what is to be expected here? And yes, here you can say, oh, large range, but then not a small range. Yes, it is not 100% logic. But usually you tend to, after a large range day, have a small range day. And that small range day is associated with forming a swing, which usually leads to consolidation days, or a retracement. And after digging down into our fair value gap, which, as we said, the plan has not changed, I'm looking for a retracement lower to continue higher. But if I see that we are disrespecting our previous gap, right, which is what we saw on Tuesday, then where is my next objective? Well, the next gap. Why? Because we had a very bullish move. And so I don't anticipate that the retracement needs to go to a discount. Also, something very important to note here, if I just mark out the start of the week, so I'll have a vertical line on Friday, which means that anything outside of that vertical line is our current week. And you can see the power of three showcase here with 2 degrees free power of three indicator. You'll notice that we took out important liquidity at the highs, forming daily SMT, right? If I plot it perfectly, it would showcase like this because this candle is not a swing point on NASDAQ, right? We had a week of daily consolidation, which leads to uncorrelated markets in the higher time frame. But now, especially at the start of the week, we see a very important aspect in what's going on, which is higher time frame SMT. Meaning what? Well, I understand I was bearish from that day. Now moving into Wednesday, since I had a very large bearish move, I'm going to look for some sort of retracement to the upside, especially since we are in a higher time frame bullish point of interest, right? Same thing on ES, being the stronger asset right now. We are in a higher time frame bullish point of interest. I am looking for longs. That is my understanding. And if we go down to the 15-minute and we look at today, and let me just adjust these settings. I was actually utilizing them for something very specific. So let me just do this opening price, have that be opening price as well. There we go. This should fix it, and dotted there. And let's add the text. I'm sorry, I had these settings set specifically for a Twitter post I made, but now I kind of want the correct settings. And let me just remove the previous instance. I will go in replay mode just so that the indicator can adjust to the current day. And then if we look back, right, we're in a 15-minute chart right now. What did today do? Well, we first started by expanding lower, then made a large consolidation range inside of that gap before expanding higher and having a deep retracement. So today, what I'm trying to say is the distribution was higher, clearly. But you could have also had a pretty nice move with the downwards retracement. So yes, we started this off by speaking about bias and what was my bias going into the day and why. But truth is, no matter your bias, your bias doesn't matter, right? Because there were short opportunities and there were long opportunities that were both high probability, if we can say so. And that's what we're going to notice once we go down in time frame. First thing we have to notice, though, is SMT at key times. This is 3 a.m. This is the London session, which on trending days will very often make the high or the low of the day, right? Will form one of the extremes of the day. SMT at a key level at a key time. That is a potential low of day candidate. That is the exact logic that I teach and that I've spoken on 1,000 times. SMT, key level, key time, potential low of day. And that logic can be fractalized higher and lower. Also, another key time is New York Open. Now, on New York Open, we had lower time frame SMT present, right? And we previously had higher time frame, speaking on the 15-minute, right, intraday SMT at the moment. So starting 9:30, I would have been looking for longs no matter what. But we had one very specific thing today, 10 a.m. news. I believe it was Jolt's job openings. I do want to make sure before I say something. Yes, it was Jolt's job openings. So we had 10 a.m. news, meaning we don't want to engage with price before the high impact news event. And as you can see from the result, just on a 15-minute chart, you get why. What did this specific news candle do? And the reason why I'm staying on a 15-minute chart here, it's because our structure was already pre-established. We expanded to the upside. Now we formed a fair value gap. News opened low, retracement into it, forming SMT as well, which is, I'm going to put it blue this time. Well, here. I'm going to put it blue so that it is, so that I'm able to differentiate it. And now there is SMT here. Just for it to be a little nicer to look at, I am going to place it like this, but no matter how you draw it, right? There's SMT here, there's SMT here. So who cares how you plot it, right? Again, I'm going to utilize the same logic because that is a question I got a lot today from students, from people in the community sending DMs. What do you do when you don't have a clear bias, a clear objective? Well, you look for frameworks within Power of Three, right? So if you're unsure about your draw, you're going to look at frameworks within Power of Three. And I'm talking about daily Power of Three, which means I'm going to look at how we interact with Midnight Open and how our daily candle opened, open, low, forming a potential candidate, low of day candidate. Is there SMT at the highs? Not at this point, right? All of these swings have been mitigated, which means what? Well, right now, for my daily Power of Three, it would make more sense for us to go higher. So I'm going to look for longs. And then I will look for a rise entry model along that way. That's what I do when I don't know where it's going precisely. But if we look, you would have waited for 10 a.m. anyways. And what do we anticipate at news events, right? High impact news events specifically, we look for manipulation unless 9:30 has formed a clear Judas swing. Let's look at 9:30. What do we have? Well, we have open, and then we formed some sort of SMT between these two swing lows here, and these, well, this candle and that candle. So there is SMT. We did take out liquidity. Are we at a key area? Yes, but our Judas swing was higher. Meaning I don't have a clear Judas swing at 9:30 because I'm bullish. I'm looking for longs, which means I want to see manipulation at 9:30. And we consolidated, went back and forth before going higher. So as you said, Emil, nada, nothing. So we wait for the 10 a.m. news. What does 10 a.m. news? Very clearly, 10 a.m. expands lower. It is no way to deny it. The Judas swing for the 10 a.m. news, the open low of the new 4-hour candle was lower. So from this point on, I'm looking for longs. And I'm waiting for my specific entry model, which for me is going to be a unicorn. It's not because we inverse this gap that all of a sudden I'm going to change my entry model. I have my rules. I know my data linked to my model, and I'm going to concentrate on only taking that. Indeed, Emil. I saw you in chat. But from this point on, as we said, right, invalidating this array tells you what? It is a confirmation, right? You gain confluence because you're invalidating offside arrays. So bearish arrays are not being respected. This is a confirmation that you can be bullish. Daily open level is the black level right here. And then what are you looking for? Well, you can see from this blue line, it is a flip of the 4-hour candle. This is a signature that I very much appreciate because you already have SMT, you already have a breaker block that we just formed trading above here. But flipping this 10 a.m. open after opening low, returning higher is a big indication as to the future development of the candle. So I look for closes through and basically utilize this level as support and resistance later on. And yes, these words sound horrible, whatever. You've been told that retail support resistance is bad. Truth is, we're all retails here. Unless you're trading a multiple tens of millions of dollars for a firm, you are a retail trader. And yes, this is a term I like to utilize. I don't follow any concepts like that specifically. I am unfamiliar with them, but I do utilize opening prices sometimes as I would like to see them be supported, just like an inversion fair value gap is support and resistance. But enough ranting about that stuff. As I said, once we trade above this high, we now have a market structure shift. We have our breaker block present, right? Low, high, very big lower low. And then, of course, higher high right here. Same thing on ES once we trade above this high on the same candle, forming your breaker. Now, this is something very specific that I don't talk a lot on. This blue is triggering me, so let me just switch that over to a light gray so that my eyes stop hurting and hopefully yours as well. This is our daily point of interest, by the way. So you have higher time frame context, you have everything present to tell you go long. Now you also have a breaker block, but I wouldn't utilize this breaker block. I would utilize, and for standard deviations, right? For example, I wouldn't use the breaker standard deviations of this block. I would utilize these, and these have been, there we go. They weren't drawn right. Why would I use these instead of these? Well, it's very simple. Right here, we formed a range, right? So I'm going to put this very bright, very in your face. We formed a range, right? At this level. From this swing low to this swing high is now a range. Everything else here is trading into it until we break that range here, which means that the range of the breaker is from here to here. Yes, this is a breaker block. Yes, this is a breaker block, but the true breaker is here. And it's once we trade above this that is the true breaker. Am I still looking for entries once we form this breaker? Yes, because I anticipate this breaker to form very soon. So I don't need it to form before I look for an entry. But if I'm using standard deviations, I'm going to want to use the true standard deviations, which will be the standard deviations of the range I am currently utilizing. And it is this range, because this is just a short-term range formed within. Now you can still use it, but it won't give you as deep of an insight into what's going on as this range will. I just wanted to explain my thought process before just blasting that into you guys. Now we have our breaker. Where's our closest PD array? The inversion fair value gap. That is our closest array that we have that we can utilize, right? There is no bearish fair value gaps formed here, other than the huge news one, of course. And our next fair value gap is lower, and I don't need it to retrace all the way down here. I only need it to retrace all the way to the inversion fair value gap. So if you use a small breaker, this candle formed the breaker, and hence the next candle trading back into it was your entry. And if not, you could have had that. Now I could go with my hindsight and say, you know what? This setup, I would not have taken it. I would have waited until it traded into the lower fair value gap, or I would have waited for the second unicorn that formed. If you see this breaker and then trading back into this fair value gap right here. This inversion fair value gap. This would be your entry. Beautiful stop just at this low. No, I'm not going to blindside you because that is not the easy setup to find. And that is not even the setup I traded today. I actually missed that one specifically. I entered straight on the inversion fair value gap due to the creation of this breaker block. Now, where would your stop loss be? Again, 3 PD array rule. So I have my entry PD array, and then I have fair value gap, order block. all of these PDRAs fit within my entry. But where's my low-hanging fruit objective? Well, we need to look at our current intraday range, and I'm going to verify that on a 5-minute chart. And as we can see, this is the point where I have my breaker block at 9:45 breaker block, and we have yet to break the daily high. So my first objective will of course be to break the daily high, right? The current high of day. So that would be a first objective. Let's just call it buy side liquidity, or actually, you know what? Let's call it the same as I usually call it, current. Oh, I wanted to have it before the icon. Current high a day. I'll just call it like that. If you ever see that, that's current high of day. But what do I also see when I go to a 15-minute chart? As we said, 15-minute chart, our intraday chart. Whenever you're looking for objectives, you're looking for retracement opportunities. The 15-minute chart is my intraday chart. That's how I find the intraday order flow and establish opportunities. Well, one thing jumps to my eyes, and it is all the low resistance liquidity through the form of failure swings. Let me just move that to the top. There's low resistance liquidity here and all the way here, even all the way down. Why? Because we've been consolidating since then, but now this swing point has been taken. So there is a lot of failure swings that lead to low resistance liquidity, very aggressive moves through them. So first objective would be the current high of day, but the next objective is going to be this buy side liquidity. But why this one and not that one? Well, first of all, these are equal highs, relative equal highs. If you look to the right and I just move away this drawing, you'll see another swing point just here formed in close proximity. Those are relative equal highs. Question, sir. Go ahead, Emil. Ask the question. No need to raise hands here. By the way, guys, if you do have questions while I'm talking, please do take the time to interrupt me, because I'm going to keep going. I can keep talking. I anticipated a bearish Judah at 10 because of local bearish SMT. I would say that the market tipped its hand, telling us direction of the manipulation. How would you see it? All right, well, we'll go back to the 1 minute in a second, and I'll talk about that. I'll revisit that once I dive down to the 1 minute. No worries about that. But just to reiterate, relative equal highs, low resistance liquidity will be my first objective. And now I expect a small range day. So of course, I don't believe it's going to go much further. But if I would, my next objective would be this buy side liquidity above, and would be confirmed if we invalidate this gap, which, as you can see, sweeping the low resistance into our 15-minute array. Let me just call it 15-minute fair value gap, did create the high of day. And what I do like to point out is, see the 2 to 2.5 right here? And if I go back down to the 1 minute, you'll see the high of day was formed within 2 to 2.5 of that real breaker range. So very beautiful. Now, if I have current high of day as my low-hanging fruit, that's 0.7 R. That's too small. Now, one of two things can happen then. You could decide, hey, that is too small distance to my low-hanging fruit objective, so I'm going to skip this trade unless it keeps retracing lower, which will give me a better entry. So for example, if you skip this trade because it was not enough risk to reward, which is what I tend to do, and then you see it induce this level, right, coming into close proximity, forming equal highs with that level, and then going back down, then that's an entry signal. Now, this also does not offer enough R, but once you go down here, 1R, and 1.12 R to my low-hanging fruit, that is enough. But whenever we backtest, whenever we review what price done, we are pessimistic. At least I know I am. That's always how I handle these types of things. And as you can see right here, you could take partials here. Truth is, that's too low. So I would have at least waited until one standard deviation of the breaker, which is a very high probability objective, bread and butter for sure. So first things first, you have this, then you have your equal highs above, which offer just under, well, just 1.75 R, and then the reversal range, which offers just over 2 R. So definitely a beautiful setup. As I said, low range day. You don't anticipate much from that. And you had quite a wide stop on this setup, but this is my model. And yes, it's not always the cleanest, perfect setups. We had a beautiful week last week, and the setup offered just over 2R for 150 points, which is not what I tend to look for, but it was definitely a very nice setup. And then, as I said, you also had short opportunities, which is just into your face, right? Reversal range, we reached our rate, we took out liquidity, high time frame context, could see for a retracement. And then I would consider here, just before we dive into the short setup, actually, to go back over what you said, Emil. You said you anticipated a bearish Judah swing. So by a bearish Judah swing, do you mean a move to the upside or a bearish fake move? Which means what we had. I just want to confirm what you're trying to say. Okay, so by a bearish Judah swing, for me, doesn't mean a Judah swing that went lower. It's a Judah swing that gives me a bearish idea, which means a bearish Judah swing is a move to the upside. A fake move that tells me I'm bearish. So I just want to be precise with what you're trying to say so that I can understand truly your question. But just here, while you answer that, what I said and what I meant is that for me at news, I rarely have anticipations. Today I did. I wanted to see higher, which means if I want to see higher and say that news, I want to see news be manipulation, then that means I want to see news go higher. Go lower, sorry. I'm confusing myself trying to answer. But I want to see news go lower because I'm bullish and I associate news with manipulation, which means an offside move, a move against my direction. Now, having formed SMT at the lows, yes, there was SMT at the highs, something I did not point out because, as I said, I was bullish. I didn't care. But if you look here, at the time of the news, there was divergence at the highs. Trying to say I knew which way the manipulation was going, etc. Want to see how you saw it. I know we have similar minds. Yes, indeed, I was looking for longs, wanted to see price go lower. SMT confirmed that idea, and then I was just waiting for my breaker to form, entry model, just the trade that we just saw on it. So yes, I did have the same idea in mind today. We'll have more chance to showcase that live on Friday. First live tape reading event in a while. I can no longer call it live trading because I'm not going to be trading live with you guys since let's just say that prop firms don't really like people giving out signals, and I don't want a live stream to be interpreted as a signal. So I'm going to leave it at just tape reading for now. My pleasure, Emil. Now, for the short setup we were talking about, right, we already looked at all the context, sorry. We have everything we need. We have reversal range. The only thing we don't have is SMT, but that would be trading a retracement. So already there, that's not what I call an A+ setup. That would be counter trend. That would be an A setup. And there's no SMT, A- setup. Doesn't mean you can't trade it, but if your bias was bearish, then that's your A setup for you, right? Just perfect setup in line with your bias. The only problem was, as I said, there was no SMT. So not the best setup, but it was a setup indeed. And I don't know which ones of you are trading if you're trading my model, you might be trading the aggressive approach or you might be trading the conservative approach like I am. You had your breaker formed, higher time frame point of interest, 15-minute fair value gap, reversal range, that aligns, and then you get your reaction, forming your breaker. What do you look for? The first overlapping PDRA. Let me just draw out the fair value gap. Beautiful entry, definitely just barely retraced into it. Institutional order flow entry drill. Then 3 PDRA rule, right? You have an inversion fair value gap to the left. You have another inversion fair value gap here, and you have your fair value gap for your entry. Your stop is going to be at this high to let it trade all the way back to that inversion fair value gap and let it wick back, but not to this high. So that indeed was a better trade in terms of return, but not a better trade in terms of the setup. If we now go to the 5-minute chart, and I'm going to remove the current high of day line just so we can see. If I'm trading a retracement to the downside, what range am I going to utilize? Well, I'm going to go in my 5-minute chart and I'm going to utilize my current daily range, more specifically, my latest expansion range. And that would be from the low we formed at the news to the high we formed there, which at the moment, at that time, you did not know it was high of day. So I don't want to call it high of day, but that is your current expansion range, the current range you'll be referring to. In that range, what would be your low-hanging fruit objective? Well, the first inefficiency and discount, and that would be this order block right here, I believe. Yes, because this fair value gap is not in discount, it is at equilibrium. So this would be your low-hanging fruit. As you can see, you're trading counter trend. So if you didn't break even your trade, you could have reached all the way down here, no problem, except for the fact that you gave back almost, what was that? Probably you gave back a potential 5R in profit to go back break even, and then it saved you and went back down. So that's crazy stuff. Truth is, I'm looking at liquidity, especially my 5-minute chart right here, and more specifically 4R at this level. There is no way I'm leaving that much profit on the table. And that's just a question of risk management, which is not something I shared in my model video on purpose, right? This is kept for the people in my private mentorship. They do have their value as well. But a clear 4R in, what is that, 19 minutes is extremely well. What is your objective? Well, relative equal lows right here, actually. 5-minute swing low, relative equal lows into a discount of the latest 1-minute range, right? Of this 1-minute range, sorry, which is probably 3-minute swing points at each point. And then you have your actual partial, which is your, not your partial, sorry, that would be your objective, because you're trading a retracement. You expect it to respect this level and then continue to the upside. It did dig a little deeper back into the gap, and now retrace higher, close the day, basically forming a consolidation day with one expansion higher. So there was, as I said, short opportunities, but I do not believe that was the best trade, even if it was the best result, because your win rate, your consistency trading retracements will not be the same as your consistency, trading expansions. And yes, today the retracement trade was a better return than the expansion trade, the distribution trade, but it did turn out to have both winning trades no matter what, so we love it either way. Do we have any questions about the both setups that we saw, or anything about today now that we've completed this? And as I always say, by the way, guys, why would I look at the PM session? There are 2 opportunities in the AM session. I would never consider trading the PM session. If I just missed out on these 2 trades, I would just say I missed my trades, I'm done for the day. And I don't see any questions. All right. That's a good thing, I guess. Seeing a few people type, so I'm gonna just let you guys type real quick, see if you have any questions, and then we'll call it a night. My pleasure, Justin. As I said, you weren't the only one. A lot of people texted me today and were wondering what, but truth is, whenever that happens, the only thing you have to do is zoom out, right? Just take a step back. Don't think about it as you're trading this, right? Because it can get in your head at some point. Just take a step back and look at it. I look at it as a game. Oh, where is it going next? Am I going to be right? Am I going to be wrong? And then I look at it and I'd say, well, the highest chance is that we're going up, which means if it goes up, I have the highest chance of winning. And then I take my setup, and no matter the outcome, I'm not blaming the charts. I have my understanding, I have my logic, and today my logic told me that we're going to go up. And as I said, I was anticipating a small range day. Glad you guys enjoyed. We're going to call it a night. I'll see you all on Friday for our NFP price action review. Other than that, we won't have any other PA reviews this week, as I will not be trading tomorrow. Actually, I was going to do quarter risk, but I will not be trading tomorrow. I'll be concentrating on the app. So y'all have a great night. Good luck if you're trading tomorrow and on NFP. we'll see each other for actually the live tape reading session for NFP Friday morning. My pleasure, guys. Have a good one.